Hey everybody, it's Ed, and the future is now. And the future is an example of a day trade. Okay, I'm giving you this example because I used to day trade back in '08, '09. And so I learned a few little tricks and stuff to doing it successfully when I was trading Apple. So I decided to do it a little bit with Tesla. And I wouldn't say like try my luck, but basically, with the market being this volatile, I don't want to be juggling a million things right at the moment. Okay, so, and I saw basically when yesterday it tumbled 2,000 points, anytime that tends to happen in the past, you get a bounce the next day. So I wanted to be prepared for that scenario. So before we get into the details, be sure to subscribe and hit the bell notification. It doesn't cost anything to do, but it definitely helps the channel. And I want to get out to more people, more information, and get more information back from subscribers as well. So I wanted to give a shout out to you guys today, subscribers. You guys helped me kind of stay focused and kind of paying attention to everything today. Bruce and Real Truth, Eric R, Benny. Let's see who else. Oh, Max, Jason 117. Let's see, D-Man. Can't forget him too. Zonk the Great. Trent Thomas, love that name before, and ZJ Patel. A lot of you guys. I mean, there's a few others on here too. That really good comments, and I appreciate it. And somebody asked about space and when we're getting in, and not too sure yet. Space is a little trickier of a trade because I don't want to overcommit to space kind of early. I want to give space a little bit of time to play out through this kind of volatility. Tesla's a little bit easier to get in and out. It's kind of easier to see what's going on. But anyway, I just wanted to give you guys a big thank you for all the positive comments today. Thanks a lot, guys. Now, getting to the chart today, this is the fun thing. Okay, you guys know that I basically, because the market got slammed yesterday, and it was basically at the support line for Tesla. So we gobbled in at 618, and you can see that in the green on the left-hand side. So I knew we were pretty safe. I knew it wasn't going to be a massive crash after crash. That's usually pretty rare. Usually it goes up about 1 to 2% after a major crash. So I took a gamble there in that aspect. And of course, it spiked up. When I checked in pre-market, it was up to like 680 or something ridiculous like that. So I had a sneaking suspicion, and this happens a lot frequently, and if you day trade a lot, you would see this a lot. When it spikes up, it usually goes into this crazy sell-off in the first 5 or 10 minutes. Sure enough, you can see that up to the top left with the two red bars, okay, candlesticks. So you're basically, I was watching that with my hand on the trigger, just waiting to pull out. I was hoping it was going to continue to go up, potentially even test higher, but it didn't. And then I saw it kind of caving, and then we ducked out at, what was the amount? I can't even read it. It was 660. It was almost 660 on the nose. I didn't set a stop loss. I was just ready to get rid of it. Why? Because we already cleared like 9,000 off of that. So why would I'm not going to get greedy in that situation. Okay? I could have easily got greedy and then had it kick all the way down to like 640 or something and then sold it and been like, wow, okay, I just threw away 20 a share. So, I mean, was that luck where I sold it at, or was I making a plan and executing that plan? Okay? So now what happened was I watched the market closely, or I should say, and the market, the S&P, the Dow, and Tesla. I mean, every 2 or 3 minutes for hours, for about a couple hours, I'm watching all three and rotating between charts. And I basically said to myself, hey, if Tesla comes back down and starts cratering down and starts waterfalling off, I mean, maybe I could get back in at a lower value again in the same day. I'm thinking, okay, that's possible. Not really likely, but it could happen. This happens when things get kind of volatile in the market. Sure enough, I'm watching red bar after red bar after red bar. You can see like 8 of them in a row. So I almost pulled the trigger right in the middle at that green bar, but I didn't. I was being like very conservative. I'm like, you know what? If this gets down a little lower, maybe into the where I basically purchased the other day, now I'm in a total safe zone. We just cleared 10. Now we have a chance to buy back in at the original amount that I just bought back in the day before. And sure enough, it kept cratering again. So I didn't pull the trigger there because I didn't see enough signs with the S&P. The S&P was still triggering down and down and down. Okay? So at this point, it's getting down to, let's say, the last couple red bars before the first green bar up. And I am sitting there watching these bars and I'm like, okay, where are the supports for Tesla? Where's the supports for the S&P? So I'm checking all the supports, and that's the red lines down on the bottom, and you can see those potential supports. So I'm like, if this cracks down anywhere under 610 or 620 to 610 or whatever, I'm going to snatch onto this. Okay? Because I mean, I basically am at no worries at that point. So we did 150 shares on the left side, but then I literally bought almost, I mean, $1 above bottom. It's 609 instead of 608, which is the max I think it got to for the bottom. So we bought in at 608, and I'll show you a slide of that so you can see it. And then anyway, and it started bouncing. S&P bounced, the Dow bounced, and Tesla bounces. So once it got up to about 20, once it got back up to 620, I should say, I'm just thinking 20, 40, I'm basically trying to calculate $10 a share. I put 100 shares in, so every $10 a share, you see how I'm factoring that. $10 a share times 100 shares is $1,000. So I basically started putting stops on once it got over 20. Okay, once it got over 620, I'd put a 615 on. It got over 630, I'd put a 620 or 625 on. And then I put a 630 on when it was into the 640 range. And then it tricked the stop. Now I could have set a trailing stop, but instead, I mean, because I was monitoring it constantly, and checking data and doing stuff and bouncing around from chart to chart, I don't need to do that. Now, if you're going to walk away from your computer or from your trading platform in the middle of this type of market and you come back a half an hour later, I mean, you could potentially lose thousands of dollars or, tens of dollars per share or percentage, 5 or 10 or 15% potentially. Okay, that's how fast it happens. So, I don't like, I'll set those stops when I'm going to leave, or I'm not going to be able to act quickly. So that cleared all the Tesla shares at 630. So we cleared another $20 per share or $2,000 profit. So we made 9 plus 2, plus we had positive moves on Google. So we ended up about 11,300 positive for the day. Okay. Basically on more or less a day trade. And now we don't have to go in tomorrow worrying if it's going to gap down heavily. I don't have to have the stress tomorrow morning about that. I can just kind of jump in, see how the market's going, and make a play sometime during the middle of the day. So you can see with the personal value chart, basically where we spiked up in the middle of the chart was that Tesla super spike. And then we got hit when it came down, and then obviously it came back up to basically where it was at before anyway. And then basically you can see that one down day that's late February, I guess, or early March. You can see that hit. And I think that was that was a $10,000 hit day. So we had two pretty bad day scenarios where we lost like, I think 14 or 15,000 or something like that, and then 10,000. So we lost 24,000 on those two bad days, but you can see the track from early January to March, or from January to March, we're still solid on our trend up. Even during this crazy sell-off of a market, we got out and then started making money. Granted, it took me a little bit of time to get my bearings on this to realize, oh, this is a bear market. I have to change my strategies and my pattern. And we went over the gold position that we had, but we closed that position yesterday and the short positions that we had, and we closed all of those. That bottomed out at $2,000 for a loss, or 2,000 points, I should say, for the Dow on a day. So I did not want to have those shorts on even for the next day. That just didn't make sense. And if I would have had the shorts on, I probably would have lost about 4 to 6,000 on those shorts. So that wouldn't have been smart either. So I cleared all the shorts and said, you know what? Let's go Tesla long by itself just as a short-term trade. And it worked out really good today. You can see how that did. You can see the big gap up, of the 12, whatever, $11,000 day. That's pretty solid. And I want to continue this type of pattern, so I will be doing more trading on a daily and weekly basis. So keep an eye on our channel, because we're going to be trading space. We're going to be trading Tesla a lot. We're going to be doing a lot of things, so you can see when I'm buying and selling and when we're gaining or losing money. I'm not going to make great position trades like I did today every day. You can't count on that. I played it almost perfectly today, but that doesn't mean I'm going to play it perfectly tomorrow. Tomorrow is a new hand. They're redealing tomorrow. So I'm not sure what's going to happen tomorrow. Okay, I had an idea of what was going to happen today, and sure enough, it did, almost like clockwork, and we played it perfectly. I mean, as good as I can play it. But anyway, thanks a lot for joining, and be sure to subscribe and comment on anything. I always look for positive and negative stuff. It doesn't bother me either way. I don't care if you're short Tesla or long or short this, or worried about anything. It's always good to hear what's going on in the real world of investors.